All right, welcome everyone. Today, we're diving into a masterclass on translating what usually looks like an intimidating, chaotic mess of financial charts into simple, readable stories of market psychology. If you've ever stared at a screen full of red and green bars and just felt completely lost, you are in the exact right place. We're going to decode this visual language together in this explainer. So here's the million-dollar question, isn't it? When you look at a chart, it's so easy to just see random noise. But I want you to shift your perspective right now. Every single candlestick you see, it basically represents a fierce, mini tug-of-war between buyers and sellers over a specific block of time. By learning to read the visual record of that battle, you're not just guessing anymore. You're actually giving yourself a massive statistical edge by understanding exactly who is in control. Okay, let's dive into our roadmap. We're going to cover 1. The alphabet, 2. The words, 3. The sentences, 4. The paragraphs, and finally, fluency. We're building this from the ground up. Starting right at step 1, the alphabet. Let's decode that candle anatomy. Look, the absolute most basic element on any chart is color. It instantly tells us who won the tug-of-war for that session. A green candle, that just means the closing price was higher than the open. Simply put, buyers were stronger. A red candle forms when the closing price is lower than the open, meaning sellers overpowered the buyers and shoved the price down. And that solid-colored area, we call that the body, and it maps the distance between the open and the close. But, the body only tells part of the story. Notice those thin lines poking out the top and bottom? Those are the wicks, or sometimes they're called shadows. While the body shows us the open and close, the wicks show us the absolute extreme limits of the battle. The very tip of the upper wick is the highest price achieved, and the bottom of the lower wick is the lowest price they hit during that time. Now, what's genuinely fascinating here is how this actually visualizes effort and control. Think about it. A big body with tiny wicks, that means one side traveled a lot of distance with virtually zero pushback, just total dominance. But if you see a small body with large wicks, it was a brutal, tough contest with very little real control from either side. A large upper wick means sellers had to put in some serious work to reject a high price, and a large lower wick means buyers fiercely defended the bottom. Moving right along to section 2, the words. These are your basic one-candle patterns. First up, the bullish pin bar. This one is a super strong reversal signal. Picture this. Sellers are aggressively shoving prices down, right? But suddenly, they hit a level where all these massive buy orders are triggered. Buyers instantly step in, totally overwhelm the sellers, cover all that distance back up, and push the price beyond the open, leaving this huge lower wick. When you see this, you generally place a buy order above the high of the pin bar and strategically tuck your stop loss right below it for protection. And the bearish pin bar? It's literally the exact opposite scenario. Buyers are pushing the price up, making a new high, but suddenly sellers get aggressive, step in, and yank the price all the way back down, closing near the lows. It leaves this massive upper wick, which just screams a strong rejection of higher prices. It's a great opportunity to look for a sell trade below the low with your stop loss just above that wick. Then we have the Doji. Notice that tiny body right in the middle? The Doji is kind of unique because, honestly, it doesn't really have a directional bias on its own. Buyers pushed up, sellers pushed down, and the whole tug-of-war ended in a dead tie, closing right near where it opened. By itself, it's just a pause. But if you see several dojis in a row, pay close attention. It means a massive, coiled-up battle is happening, warning us of a wild breakout coming in either direction. Okay, let's step it up to section 3, the sentences, intermediate two-candle patterns. These are the engulfing bars, and I really want you to think about the psychology here. One side is comfortably in control, right? Say, in a bullish engulfing, sellers are walking the price down with a red candle. Then, bam! On the very next candle, buyers step in with so much overwhelming pressure that they create a massive green candle that completely swallows or engulfs the previous red candle's entire progress. The bearish engulfing is the exact same story in reverse. It is just a brilliant visual of a sudden total transfer of power. All right, on to section 4, the paragraphs. Advanced three-candle patterns? Say hello to the Morning Star pattern. This is a highly reliable bullish reversal sequence, and it tells a complete beginning-to-end story. First, strong red candle. Sellers are running the show. Second, a small doji or pin bar forms. The sellers are losing momentum, buyers step up, and we get a pause. Third, A big green candle erupts, breaking well above the high of that doji. The buyers have definitively won. Quick tip. For a high-probability trade, you really want that third green candle to be roughly the same size as the initial red one. On the flip side, the evening star is our bearish reversal paragraph. Buyers are dominating with a big green candle. Then a doji hits. The tug-of-war hits a stalemate. Finally, sellers absolutely crush the buyer's momentum with a huge red candle closing way beyond the previous lows. When you see this exact three-part story play out, it is a prime signal to place a sell trade below that massive red candle's low. So, all these crucial points summarized right here for you. Honestly, I'd take a mental screenshot of this cheat sheet. From the one candle pin bars all the way to the three candle stars, these 7 core patterns are your foundational vocabulary for reading market sentiment. And finally, Section 5, Fluency. Trading with price action. Listen, this is probably the single most important concept in this entire explainer. Finding these patterns randomly scattered across the chart? Completely useless. Seriously. To actually give yourself a statistical edge, candlesticks absolutely must be combined with price action concepts, specifically support levels, resistance levels, and trend lines. We need that context to find the high probability entries. So let's walk through exactly how you'd execute a buy trade using everything we just talked about. Step 1. Identify a solid support zone or an upward trend line. Step 2. As the price drops toward that support, watch the candles. Are they shrinking? That means the selling momentum is dying out. Step 3. Right at that line, you wait for a confirmation pattern, like a doji followed by a massive green breakout, or morning star. Once you see that, enter your trade above the green high and just tuck your stop loss safely below the pattern. And this right here brilliantly illustrates the flip side, how to execute a sell trade. You find a resistance level that's held firm before. Now, when the price tests that ceiling a second time, you don't just blindly hit sell, right? No, you wait for the market to actually speak to you. You look for a bearish confirmation pattern right at that resistance, like an evening star. Once confirmed, you enter the sell trade at the red candle's low, set your stop loss just above the pattern's high to protect your capital, and target those historical lows for your profit. You're combining context with visual proof. Just think about how insanely powerful this is. Instead of staring at charts with that knot of anxiety in your stomach, guessing what might happen, you can simply wait for the market to give you a clear, readable sentence. Treating the market as a language of buyers and sellers transforms absolute chaos into calculated opportunity. So I have to ask, could mastering this visual language finally be the exact shift you need to strip the emotion and the panic completely out of your decision-making? I highly encourage you to pull up a live chart right after this, look for these patterns, and see the hidden story for yourself.